In this video, I'll be breaking down how you can go from a beginner to start learning the skills to become a confident DeFi investor. So this video is perfect for two types of people. First of all, those who invest in crypto, but not DeFi. So those are people who may hold Solana or Bitcoin, but the assets are just sitting there and not earning income. The second type of person this video can help is those who are completely new to crypto or DeFi, meaning you might not even have a crypto wallet or you don't have any crypto assets already, such as Solana or Bitcoin. My goal here is to teach you how to spot solid liquidity pools like this one I'm in. Look, at the moment since I deployed March 13th, I'm up in profit and I'm beating if I were just holding on to my assets in the market, meaning that if I were holding on to my assets in the market, I would be earning less than me being deployed into these liquidity pools earning income. Always remember to do your own research. There's risks to this investing, such as divergence loss. I'm not a financial advisor. I'm just giving you my opinion. So first things first, go over to phantom.com and you can go ahead and hit download, add to Chrome, and you'll get an easy crypto wallet for Google Chrome. The second step is go over to Coinbase, or a place where you can go ahead and buy cryptocurrency, so meaning a centralized exchange, etc., and have a payment method ready, and you can go ahead and buy Solana or Bitcoin. And once you have that Solana or Bitcoin, you can go ahead and send it to your wallet. So for example, I have like $2,400 sitting in this Solana wallet over on Coinbase. I can hit send crypto. What I'm going to do is go to my Phantom wallet and copy the Solana address and then send it to my Phantom wallet. So say I wanted to send $1,000 to my Phantom wallet for DeFi investing, I would type in $1,000 and go ahead and send it. If you're not familiar with the liquidity as a service business model or how you can even make money with these liquidity pools, I can break it down for you. So there's these things called decentralized exchanges like Uniswap or Orca, and basically they're websites where traders go to swap one asset for another. So for example, a trader who has Ethereum might go to this website and swap it for Arbitrum. So if a trader wants to swap 3 Ethereum for Arbitrum, what's really interesting is that they're going to have to pay a fee. Look, here, it's about $14 fee, $13 fee. But what's cool is that a percentage of this fee gets paid back to the liquidity providers that are providing liquidity, enabling this exchange to happen in the first place. Because think about it. If no one's providing liquidity or capital to Uniswap, how are these trades going to happen in the first place? Where's the money coming from? So by you putting up your cryptocurrency assets to a decentralized exchange like Uniswap or Orca, you can make money whenever traders are swapping one asset for another. So if you go to Uniswap, for example, go to the pool section, view positions, you can start scrolling through different liquidity pools. Now, as a beginner, this might be very overwhelming, but don't worry, that is why I'm here. If you're excited for me to show you how to make income with your cryptocurrency assets, make sure to subscribe and hit the bell so you don't miss an upload. But anyways, scroll down and you can see some liquidity pools. The thing is, there isn't too much information on these decentralized exchanges. For example, if I click Pepe to Ethereum, we can see some basic information about the pool, such as how much money and fees are being paid out every day from that pool. You can also see TVL, 24-hour volume, but there's no sections to run calculated simulations or even see how correlated the assets are to each other. Correlation is really important to know because you're going to want to know if, for example, Ethereum goes up, is there a good chance that Pepe will go up with it or not? So similar story over on Orca. You can go to the pool section, see some information about the pool, but you can't do detailed simulations at different price points, and you also can't see how correlated the assets are to each other. So overall, going to decentralized exchanges to spot liquidity pools and also do due diligence on these liquidity pools is not always the best option. Today, I'll be using the software Metrics Finance. It's the best software for finding these liquidity provision opportunities, simulating your returns to see what type of money you could be making on your crypto, and then third, building out and tracking your portfolio. So I'll go ahead and launch the app, and in the description down below, I'll leave a link where you can claim a trial to the pro version of Metrics Finance. So go ahead, try that out if you'd like. Anyways, I'll go to the Discover tab at the top. So right off the bat, there's a lot of information, but don't be too overwhelmed. I'm going to try to break some of it down for you. So at the top, it says select exchanges. Remember, we were looking at exchanges like Uniswap or Orca. Well, here is some of the popular ones over the years, and you can select out which exchanges you want to look at. Now, hopefully you're familiar with some of the exchanges, but if not, it's okay. So you can select ones like Uniswap, Orca, Radium, Velodrome, Aerodrome, and then for networks, you can select which networks you want to look for pools on. Now, some networks have different fees and other utility. For example, Ethereum has gas fees, Solana typically has lower fees, so you can look at whatever whatever networks you would like. I'm going to look at Ethereum, Arbitrum, Optimism, Base, and Solana. So now we can see there's 2,520 liquidity pools for us to sort through. That's so many pools, and sorting through one by one would take ages. So let's add some filters. Now off the bat, we can see some liquidity pools that are showing a very low APR. We want to filter all those out of there. So we can go to fees APR, look for pools that, for example, have higher than 14% APR, or let's just say 17% APR for this video. Then we can go to the TVL section here and go, let's look for pools that have higher than, for example, $3 million in TVL. We could even make that higher. Let's go with $4 million in TVL. Now we're already down to 123 pools. So right off the bat, we knocked out about 2,000 pools out of the equation. And now we want to try to get down to more pools that are consistently paying out high fees on a daily basis. So we can go to average daily fees and we can look for pools that have more than, let's just say, $3,500 in fees. We're not going to want to enter pools that have $1,000 or $2,000 in average daily fees, probably, because think about it, that's not too much money per day being paid out to go to all the liquidity providers in the pool. But anyways, you probably will want to look for pools that have higher than $3,500 in average daily fees. So I'll put this as our starting point. Now we have about 62 opportunities to sort through, but some of them I'm not going to be paying attention to. Because look, we see pools like MAGA47 to wrapped ETH, Pengu to wrapped ETH. And if you're not familiar, well, coins like MAGA47 are meme coins paired with wrapped ETH. I'm not interested in meme coin positions. Yes, I've heard stories where people are making profit, making money with meme coin positions, but that's not my goal here. If you've learned anything from this video so far, subscribe. I really want to hit 1,000 subscribers and be able to help more of you. So we can start scrolling down and looking for some opportunities. So we have some stablecoin to regular crypto positions like wrapped ETH to USDC, and then we have some positions like USDT to wrapped ETH, very similar. So I'm gonna go to the next page and look down the list. So here we have a position, wrapped ETH to Link. It's showing about 40% APR with a lot of TVL, about $64 million in TVL. So the next step that I'll do, because I'm interested in this position, is simulate it on the right. I'll click it to open it up. So now we can see some information about the pool. And one of the first things I'd like to look at is the correlation. I'll scroll down and see how correlated these assets are based on the calculation range that's typed in here. So it's saying based on a 30-day calculation range, so using the last 30 days of data, these assets are 91% correlated. So that's a great sign right off the bat. And remember, if we were using websites such as Uniswap or Orca, like the decentralized exchanges, we typically couldn't see this correlation. So then I'm going to scroll down, look at the volume history. Look, we can see a detailed volume history and fee history for this pool. So we can see how much money in fees is being paid per day. I'm going to want to find pools that are at least somewhat stable, not having some days that have like only a few $1,000 in fees and others that have like 50K in fees. And this pool is looking pretty stable, not bad. So now we would go ahead and find a price range at what points we want to supply liquidity for the liquidity pool. So we can drag our slider here. Now here at Builder Wealth, we do have other videos explaining how to find a range, but here I'm just going to keep it pretty simple for this video. So if your price range is more narrow, is tighter, your APR is going to be higher, but it can be easier for you to go out of range. And if your price range is wider, it can be easier for you to stay in range, but your APR will drop. So you need to find a price range that fits you and your investment style, etc. For example, if you don't mind having to check your portfolio every day and possibly rebalance, you could try to have a tighter price range and get higher APR. But if you're more of a passive investor, you could try having a more wider price range and not having to check your portfolio every day, but you may be getting a lower APR. Nonetheless, this wide price range of about 111 to 179 is showing about 60% APR, so that's solid. Now the next step here we could be is to type in our sample deposit amount. So say we want to enter $10,000 into this pool, we could see our estimated earnings per year, per month, and per day. Remember, I'm not a financial advisor. I'm not telling you what you should or shouldn't do with your money. I'm just giving you my opinion. I'm showing this tool, etc. If you're looking at a pool and you're unfamiliar with any assets, for example, this one's wrapped ETH to Link. Say you're familiar with Link. What you can do is go ahead and copy Link, go to CoinGecko, paste it in, and then click on Link, start reading about it. You can see the market cap, etc., the price. You can scroll down, click on the website, read about the asset, see the role it plays in the DeFi ecosystem, and see if you'd want to take on exposure to the asset in the first place. So if you'd want to take on exposure to this pool, if it looks interesting to you, you can go ahead and save it to your portfolio for later. Then you can go back and start looking at other positions that look interesting. So I see wrapped ETH to Uni, but it's only showing 25% APR, so I'm gonna skip that for now. Then I see USDC to Solana, showing 60% APR, looking solid. We can go ahead and simulate that in a new tab. Now this is a pool I'm currently in. I showed you early in this video how I'm in this pool. So we can start to simulate again. I'll set up a deposit amount, scroll down. We can see the correlation. Now these assets are not going to be correlated at all pretty much because USDC is a stable coin that's supposed to be pegged to the US dollar, and then Solana goes up and down. So if Solana were to go up 20 bucks, USDC shouldn't move because it's pegged to the US dollar. So we're going to go ahead and find my price range. This has been pretty volatile, you see here. So I guess I'll go with a wider range for now. So if we go with a min price of about 110, a max price of, let's just say 180, we're looking at about 77% APR. We could even make this about a bit wider, like 190, then looking at 70% APR. Scrolling down, we can see the volume history for this position. You can see some days have a lot. You can see March 2nd had over $250,000 in fees. So it's nice to know there's a lot of volume in this position. So from here, we would do our research into both Solana and USDC, see if we want to take on exposure to the cryptocurrencies or not. If the answer is yes, we can go ahead and save it to your portfolio for later. So then you just scroll through, look through different opportunities, spend your time doing research on these pools, look at the pool history, etc. Explore Metrics Finance and the different pools it has to offer. And remember, you can claim a trial to the pro version using the link in the description down below. Anyways, once you found some solid positions, added them to your portfolio on Metrics, you can go to the top, hit build, and you can see a bird's eye view of your new portfolio. So you can see the two pools we have in the portfolio. You can see our deposit amount for the sample we typed in. So we put $10,000 in each as a deposit amount. And then our simulation shows you'd be getting estimated $35 a day in fees, about $1,000 per month, and almost $13,000 a year. Remember, this is a simulation and there's risks to this DeFi investing. I'm just showing you the tool. But then say we want to get into this Solana to USDC pool. You look at it again, you do your due diligence on both Solana, USDC, and the pool. You say, hey, I think I have a shot at making money with this position and I'm comfortable investing into it. Well, you would look at what exchange it's at. See, you can see it's on the Orca exchange. So you'd go over to Orca here, you'd go to the pool section and find the pool. Well, you can see it's Solana to USDC and has the 0.04% fee tier. So you'd go type in Solana and then USDC. There's going to be multiple Solana USDC pools, but remember it was the 0.04% fee tier. So you'd go find that one, click on it, and then here we're going to go to position range, and we're not supplying full liquidity. We have a custom range. So we're going to go to custom. We found our max price and min price in metrics. So we'll go over here and you can see our min price was 111.1. So we'll go ahead, copy that, paste it in the min price. And then our max price was 130. Oh, my bad. Our max price was 190. Anyways, we'll go to max price, paste that in. 190. There we go. So now it's showing our liquidity pool range. So you can zoom out and zoom in to see the pool at a glance. So the next steps here would be to deploy your Solana and USDC. I like turning on this auto swap feature. So for example, if I want to deploy into the Solana and USDC pool, I only need one of the assets in my wallet. I don't need to go ahead and buy both Solana and USDC. I can just buy one of them and then Orca will automatically swap it for me. So if I have, let's just say $1,000 in Solana, I'd go ahead and click max. It would take all the Solana from my wallet and then trade it, swap it, and then enter the pool. From there, you'll be entered into your first pool. You can go to your portfolio right here, view it as a glance. But the thing is, you can't see a ton of information. You can't see your divergence loss if there is any. So what we can do is go ahead and copy our wallet address, go to metrics, go to the track section and paste in our wallet. Go ahead and paste it in. Then we can see our current liquidity, our earnings, profit loss, our APR. We can even see a 24-hour and 7-day and 30-day projection of our earnings. If you're looking to take your DeFi journey a step further, well, the Metrics Finance software comes with the best DeFi community. You'll get access to an amazing community, a ton of educational videos, and much more. So make sure to check out Metrics Finance in the description down below. Anyways, subscribe and I'll see you in the next one.